I think that the stock market was happy that the ball was kicked off on the end of the bond buying policies, and that helped the stock market. Gold was hurt particularly today with the increase in real interest rates that we saw with the bonds selling off, and I think that was the real reason that gold was hurt. And the problem with Fed policy hasn't necessarily been that it's too easy, as your earlier segment with Robin McTeer said. It's been that Fed policy has been distorting markets by suppressing bond prices, and that type of misinformation essentially coming out of the markets creates risk and inhibits economic activity.
All right, Lee Munson, let me go to you. I'm going to give you the same whack at the same ball. I don't think real interest rates went up yesterday, at least the charts that I've looked at. I don't think there was much movement in interest rates at all. Here's what I did see. Inflation expectations, as measured in the bond market, actually went down. Commodity prices went down. In fact, commodity indexes have been falling for weeks and weeks and weeks and weeks, as has the gold price. That just doesn't strike me as an easy money consequence. It certainly doesn't strike me as an inflationary consequence. Are we reading the Fed wrong?
I think so. I think, first of all, when you start talking about commodity prices and gold, you have to remember that the real marginal demand from commodity prices is coming from all this slack from China. So I think that we have to be careful about looking at commodity prices informing us about, domestic inflation. I don't buy that. I think we do read that wrong. In terms of gold, I think it's more of a sign that we're going to actually grow this economy going forward with moderate inflation. That's what we saw yesterday with the market going up so much, because in essence we're getting rid of the concerns that this is a big diesel engine that could get cold and not start. Right now, the bond markets yesterday were saying, this is like a Porsche GT3 in third gear coming out of a hairpin turn, giving us momentum so that we might make 5 or 10% next year in the U.S. stock market after a huge year like this.